Welcome to Inside the Markets, StockPulse.com production. With me today, Peter Spina from GoldSeek.com. Peter's the president and CEO of GoldSeek and SilverSeek. He's been around since the mid-90s. Today, GoldSeek ranks from the top most visited gold investor websites in the world. Peter's a frequent guest on many podcasts and shows. Hey, Peter, appreciate you spending some time with me here. Before we get to what you're famous for here, gold and silver, let's run through the global economy. How do you see things shaping up here for the bigger picture?
Well, on a fundamental basis, hey, I'm all free trade, but we're not dealing with places that are free. So, first of all, the country's been gutted in many ways. They talk about manufacturing and different industries have been exported at the expense of this country getting into more and more and more and more debt, and benefiting, the other side of the world where they're developing their own empire, which they're trying to mimic. The Chinese are trying to mimic the United States' imperial kind of global dominance, and that's becoming more and more into play, and they've been benefiting for a long time. So I think the power that it's emerging on that side of the world is starting to challenge more and more the US's dominance. So the trade war is just part of a bigger war that's going on of global supremacy and who's going to remain the dominant player for the coming decades. So there's more to this, and I think it's timing wise, we can talk more about that, but I think that's what's going on there. This is a piece of a bigger part of the game.
Yeah. Let's move on to the dollar here. Is the dollar just going to be the one thing that cannot be defeated, or is there a day in mind for the demise of the dollar?
Well, the demise will come, but it's not going to be the first one to fall apart. Um, and I said this in my workshops I did in Vancouver and other different conferences 10, 15 years ago, that ultimately the end game is going to see the herd rush into the US dollar as a last perceived safe haven kind of asset, because the US dollar still remains a global reserve currency. It still is trustworthy. We still are the dominant player. We have the global supreme military in command of different resources, and our system still works a lot better. And is what's the alternative really? Europe is a mess. Europe has been trying to challenge it on some level, but then the other side would probably be China, and they're having a lot of issues right now, and I don't think they're going to be in contention right now to really challenge that. Uh, Boy, it could be still a long period from now. So, the dollar still provides perceived protection, and it'll be like that until the very end, where there's going to be a devaluation very quickly, and then those individuals holding the dollar are going to see their purchasing power, their power evaporate very quickly. Maybe not all of it, but might say 20, 30, 40% very quickly go away.
Well, we've already lost. I mean, debate it. 98% of it. That's kind of the point. Is it's already dead.
Yes.
But it's like you said, the confidence game. There's no real place a $1 billion fund is going to throw money. So best house, bad neighborhood, I guess, defines probably the U.S. dollar. Let's move on here, because what drives the precious metals is that dollar. They're kind of moving in tandem, it seems, which is peculiar, but maybe that's the new norm. I don't know. I doubt they both keep going. But how do you see the overall health of precious metal markets? I know that the gold's been at a nice level, but it's really just kind of chopping right here.
For sure. Well, the debasement you talk about, 98%, 99% or more since the U.S. dollar, as we know it today, was issued by the Federal Reserve Corporation over 100 years ago. But a lot of it, it's been happening at a steady rate. And gold over time has responded to that. But, when we talk about this big 20, 30, 40% devaluation coming, the dollar and other currencies, that's going to be reflected in the gold price ultimately. And there's a lot of things in favor of gold right now. Fundamentally, we've seen central banks buying gold in record levels in very long periods of times. We haven't seen this, but with the game we're talking about between China and the United States, part of that is financial and monetary, and gold is a way for, say, that for China to protect itself. So they've been accumulating gold very smartly for a very long period of time. Compared to the size of their economy and their needs, I don't think they have enough gold unless they were to, issue a confiscation order and seize all their domestic citizens' private ownership of gold, which is very possible, especially in a system like that. I mean, it happened here, so why not there? But even then, I think they still have a lot of gold left to consume and purchase. Other parts of the world, like Russia, I mean, they sold off most of their U.S. treasuries, and they've been buying gold very aggressively. And on a per, reserve basis, Russia's really gone up there. And then you go look on the other side of the world, and I've mentioned this. You look at Canada; they have nothing. They have no gold reserves. It's horrible. And you see some parts of Europe which have had near zero gold reserves, and they're starting to wake up and saying, "Hey, we need to replenish our gold reserves." So Hungary, Poland, they've been buying gold. Slovakia, and they're talking about not just buying gold, but repatriating the physical gold into their country. So there's a lot of interesting things happening fundamentally with the gold market. So you're seeing shifts. I think more of the nationalism mentality, and that with it means not trusting other, with the, the trade issues and all this. That means that you're not going to trust other people as much, and gold comes into play with that as a currency and as money. So I think there's going to be a big move of central banks and nations continue to buy gold during the coming years. And then the Wall Street side and retail side, they'll come as well. And we've seen hedge funds and Wall Street becoming big gold buyers. ETFs have been seeing record holdings of gold. So there's that buying. Retail is dead still, but they'll come around. They usually come late into the game, but they'll come around.
Yeah, and then let's talk about the fuel for this precious metal markets. QE everything but the kitchen sink, I think, or maybe even the kitchen sink. Billions of dollars coming into the market. So they've already signaled that that's the plan. I believe they'll probably bring rates all the way down. A lack of confidence in governments, like you talked about, buying gold, it should set up pretty good for this market, don't you think?
Absolutely. I mean, we talked, I think, in January at the Vancouver conference, and back then the 10-year Treasury bond was yielding 3.5% or 3.25%. And we were talking about the issues that having a $22-23 trillion U.S. national deficit would, the interest rate burden would have on that kind of a debt. We're 1.7, three-quarters of percent right now in the 10-year. That's equivalent to like $400 billion a year in interest rate savings. But at the same time, despite the interest rates coming down and taking some of the pressures off, there's a huge amount of new debt from the amount of spending that Washington is doing that they're trying to now finance in the markets. So what's been absolutely amazing this year is to see the shift of the Federal Reserve go from selling these U.S. Treasuries and quantitative tightening ending early, I believe in August, that turning into quantitative easing. A couple months later, very secretively, they announced, I believe it was on a Friday when everyone else was focused on the trade news, that the Fed was going to do a temporary $500 billion and over the coming 6 months and quantitative easing by buying U.S. Treasury notes. So, the amount of debt, despite the rates coming down and interest rate pressures coming off of all that debt, the amount of new debt has been so immense. There's a lot of refinancing. There's less and less foreign interest of this debt. So we're now seeing the Federal Reserve having to come in and totally switch, 180-degree switch from what they were doing just several months ago. So it's absolutely amazing to see what's happening on that front. More and more debt globally is going down into negative territory, which means gold's a lot more of an attractive asset to hold versus cash, which is yielding negative rates. I think it's a matter of time before the U.S. goes into negative territory, goes towards or near 0%. Between the Federal Reserve buying and some other sources of demand, this is going to just fuel the expansion of overall debt, because now the interest rate component or pressures go away and they can issue a hell of amount of new debt, and they will. I think the game plan, the Keynesian mindset says these guys in the government are going to spend as much money as possible. They're going to inject it and try to, keep this bubble alive somehow. But it's just absolutely outstanding the numbers that we're talking about and the quantitative easing and other operations that they're doing right now.
Yeah. Is this a situation where the trend is your friend and we're just buying the dips here as gold bugs, or is there some important levels that we need to hold on to here? We could fail and we could get sucked down again.
From the conferences I've been to over the last 4 or 5 months, the institutional side is kind of giving off the same message that 1450 and below, there's a very strong physical demand market right now, that it's unlikely that gold 1450 and below will sustain itself if we break below that. So I think that's kind of our real big strong support area, which is where we are here now. We dipped quickly below it and we went right back above. So I think at the moment that what you want to look at is more on the upside. I think you just accumulate pullbacks, and you're going to see sometime over the next 3 to 6 months another challenge of the 1550, 1575 area. A break above that opens up $16 to $1,700 gold pretty quickly, and I think that's kind of the next big target we'll look for next year. It's possible it overshoots itself and challenges the prior record highs. I don't think gold's just ready quite yet to um, break out to new record highs in US dollar terms, but that's certainly occurring in many of the foreign currencies. So things are building up, and the US dollar's record gold highs are coming, but it'll be another 6, 12 plus months out from here.
Well, you have gold seek and silver seek. Ratio's 88 to 1. Which way are you playing right now?
I've been buying silver constantly for now 4, 5, 6 years as it pulls back into this area where the production costs for a lot of these miners are above the silver price. The $16, $17, it seems extremely cheap. The gold price is leading the way. Silver market's going to revive. It's not going to be long before just a little bit of investment demand revives the price and takes it much higher. But um, it, yeah, it's easier to play the gold side at the moment. I think silver will lag a bit more, but the big, I think, indicator this year was that ratio maxed out around 90. Yeah, I actually peaked above 95 to 1 there for a brief period there. I think that was a peak, and now silver is slowly going to continue to catch up to gold. Even at $1,500 gold, a ratio something more normal down into the 50 to 60 area would really, that would send the price a lot higher. So it's going to get there. It's just a lot of the crypto side stuff has taken interest and demand out of the market. Crypto revived back earlier part of the year. It's starting to die off again. Um, and I think just retail side has just been it's been pretty much dead. So, that has been a big driving force. So silver will catch up. It's a little later in the cycle. Commodities are also dead at the moment. So that hasn't helped.
Yeah, and there's several ways to play these things, and I know we've spent a lot of time in the equity side of things, and I'm a firm believer if you can find the right ones, that's probably the way to play it. But finding the right ones is a challenge here. So what's on your radar? How do you feel about the equities market here at these levels?
I absolutely think there's opportunities out there that aren't going to be seen for a very long time. If gold even holds these levels, there are junior mid-tier miners that are going to do extremely well. They're very undervalued. There's a lot of senior producers out there that need to replenish their assets. So any juniors that have some nice deposits out there, they all become potential targets. But for the first phase of this bull market, it's always easier to make money in the mid-tier royalty companies, less the larger miners like the Barrick or Newmonts, although I wouldn't touch them. My focus has been more on the mid tiers to junior producers with some exploration focus. I have been really interested in Gold Resource Corp this year. They're mining a new gold asset out in Nevada that's getting into commercial production, or actually has hit that. But then also some of the traditional miners, a lot of them down in Mexico that are kind of gold silver diversified. A lot of silver miners, which kind of give you that upside on the silver side, have also been diversified into gold. So you have companies like, well, First Majestic has a lot of leverage to silver, but also Fortuna. And Fortuna is interesting because they've spent the last years moving into Argentina and developing a massive gold mine down there. Obviously, Argentina has been problematic recently, capital control questions and issues. There are problems with IMF and debt, but there's a fantastic new mine that they're just starting to leach the ore off of in the coming weeks, and that's going to be 100,000 plus ounces a year. So Fortuna is really cheap. They're discounting a lot of things in the market right now, so I've been accumulating that heavily. But I do like a lot of those juniors and mid-tier miners right now. And as time develops, I'm looking more into the junior side as well, and I have some nice positions in junior exploration stocks.
Well, tough navigating these waters here, certainly. If you had a message to either a savvy investor or someone who's just entering the space as someone who's been around for a while, what would be that advice to them? I know they're looking for advice and information anywhere they can get it. Obviously, you've got a couple great resources there. What do you say to these people?
Well, I think the main underlying theme is that the rules have changed. The game is different. Things have changed, and that was a kind of underlying theme. That was what I was talking about earlier this year in January. Uh, there are fundamental shifts. Things are changing, and now is the time to be looking at these markets with a longer term focus, because the bottom of these markets are always very volatile when they finally do decide to make this big turn, which they're doing right now off a very depressed bottom. Gold and silver stocks have been totally destroyed. They've come down 70, 80, 90% or more from their highs. Some of them are going to do extremely well. I think most of them will do very well. Stick with, you can look at the winners in the past cycle and see how they're doing. You look at management. And just do a lot of research. There's a lot of information out there, whether it's GoldSeek or other sites or your show. There's a lot of different resources out there. So, take some time, understand the investments that you're involved with, keep active, with what's happening with them. And if you're really, you don't have all the time to do certain research, that you can subscribe to some of the newsletters out there, or the ETFs aren't a bad option either as far as, say, the gold stocks go. I don't trust the GLD, the ETFs. Always buy physical bullion, or have it purchased in a way that it's allocated and 100%, there's no risk liability attached to it somehow.
Goldseek.com, silverseek.com. What's the best way to follow you, Peter?
Well, I'll be at the Vancouver conference next month, so if you're coming to that show, I'll be doing a workshop, so I'll be doing some updates then. And otherwise, I'm on Twitter, Goldseek handle name, and then hopefully we'll do some more updates on your show. So look forward to coming back and following the exciting coming election year coming up and other developments in the precious metals markets. Hopefully we'll be breaking out to some new highs here in 2020.
Peter Spina, goldseek.com, silverseek.com. Appreciate that time and running through it with me, and look forward to having you back up, and we'll certainly see you in Vancouver. Thanks, Peter.
Thanks, Rob. It's been great to be back, and look forward to seeing you next month, and Happy New Year and Merry Christmas to everyone.